Welcome back to our series where we break down crypto projects in a clear, actionable way to help you decide if they're worth your time. And remember, nothing in this video is financial, tax, or legal advice. Always educate yourself and do your own research. With that out of the way, today we're diving into Aptos, APT, launched in October 2022, is a blockchain that claims to be the fastest and most scalable Layer 1 ever built. But is it just marketing hype, or is Aptos truly the future of blockchain technology? By the end of this video, we'll give Aptos a final score out of 100. You might just walk away with a new perspective on whether Aptos deserves a spot in your portfolio or not. Team and development. Aptos is led by former Meta engineers Mo Shaikh and Avery Ching, who played key roles in Diem's Libra blockchain development. Their deep experience in blockchain architecture gives Aptos a strong technical foundation. However, since Aptos is VC-backed, raising over $350 million from firms like A16Z and FTX Ventures, some critics argue that its development is heavily influenced by venture capital, potentially prioritizing profit over decentralization. Despite that, the team has delivered rapid updates and an ambitious roadmap, making Aptos one of the most actively developed Layer 1s today. Score: 8 out of 10. Use case and utility. Aptos is designed to be the go-to blockchain for mainstream applications, offering ultra-fast transactions, extremely low fees, just fractions of a cent, and a developer-friendly environment for building smart contracts. However, adoption remains relatively low, with fewer real-world applications compared to Ethereum or Solana. While Aptos has some promising partnerships and DeFi projects launching, it still has to prove its staying power in a competitive Layer 1 market. Score: 7 out of 10. Security and decentralization. Aptos is built using the Move programming language, originally developed by Meta, formerly Facebook, for the abandoned Diem project. Move is designed to enhance security and prevent common smart contract vulnerabilities. It also has a unique resource model that prevents accidental duplication or deletion of assets, like tokens or NFTs. This makes it more secure. It uses a proof-of-stake consensus mechanism, meaning validators secure the network by staking APT tokens. This reduces energy consumption compared to proof-of-work, but introduces concerns about validator centralization. Large stakers or institutions could dominate the network, reducing decentralization over time. Despite these concerns, Aptos' parallel execution engine, Block STM, improves transaction processing speed without compromising security. Unlike traditional blockchains that process transactions sequentially, Block STM allows multiple transactions to be executed in parallel, significantly increasing throughput. Score: 8 out of 10. Scalability and technology. Aptos' biggest selling point is scalability. With its unique parallel execution model, it can process 100,000 plus transactions per second, far more than Ethereum, 15 TPS, or Solana, 65,000 TPS. However, real-world performance hasn't fully lived up to the hype. Early testing showed far fewer transactions per second than promised, raising concerns about whether Aptos can truly deliver at scale. Score: 8 out of 10. Tokenomics. Aptos has a total supply of 1 billion APT tokens. But here's where things get controversial. A significant portion of the supply was allocated to private investors and the Aptos Foundation, raising concerns that early insiders may have too much control. APT's token distribution is as follows. 51% is allocated to the community, 19% to core contributors, 16% is reserved for the foundation, and 13% is held by private investors. While the team claims that most tokens will be gradually distributed to support network growth, critics worry that large token unlocks could create strong selling pressure in the future. Score: 6 out of 10. Network activity and adoption. Aptos launched with massive hype, but its on-chain activity has seen mixed results. While daily active addresses and transactions are increasing, this doesn't necessarily mean widespread adoption. Some blockchain projects artificially inflate metrics, and without clear signs of organic growth, like diverse applications and real user engagement, there are concerns that much of this activity could be driven by a small group of users or bots. In DeFi, Aptos struggles to gain traction. Its total value locked, the amount of crypto locked in smart contracts for lending, staking, and trading, remains low compared to Ethereum and Solana. This suggests that users and developers are still hesitant to commit significant liquidity to the ecosystem, possibly due to concerns over security, usability, or incentives. NFT projects are starting to emerge, meaning artists and developers are launching collections on Aptos. However, NFT liquidity, the ability to buy and sell easily, and trading volume remain limited. Without strong demand and active marketplaces, NFTs on Aptos haven't reached the same level of success as those on Ethereum or Solana either. On the developer side, interest in Aptos is growing thanks to its unique Move programming language and high transaction speeds. However, building a strong developer community takes time. The ecosystem is still in its early stages, meaning there's a long way to go before Aptos becomes a top choice for blockchain developers. If Aptos can attract more dApps, DeFi protocols, and real-world adoption, it could become a major player. For now, it's still in the early growth phase. Score 7 out of 10. Self-custody. Aptos supports self-custody through wallets like Petra, Martian, and Pontem, giving users full control over their private keys and assets. These wallets allow you to store, send, and interact with the Aptos ecosystem without relying on a centralized exchange. However, since Aptos is still a relatively new blockchain, hardware wallet support remains somewhat limited. While integration with devices like Ledger and Trezor is expected to improve over time, users currently have fewer options for cold storage compared to more established networks like Bitcoin or Ethereum. Self-custody is always the safest way to protect your assets. Join CryptoVagabonds Academy and you'll learn to be in control of your money, secure your wealth, protect your keys, and achieve true financial freedom. Score 9 out of 10. Regulatory risks. Since Aptos originated from the Meta blockchain team, regulators might scrutinize it more closely. While it's not classified as a security yet, its VC-heavy token distribution could attract regulatory attention. That said, there are no outright bans or restrictions on Aptos, and it remains compliant in most jurisdictions. With the new administration, it is likely to continue this way. Score 7 out of 10. Market liquidity and volatility. APT is listed on major exchanges like Binance, Coinbase, and KuCoin, giving it high liquidity. This means it's relatively easy to buy and sell without massive slippage. However, APT's price has been extremely volatile with major swings since its launch. As more tokens unlock, price stability could remain an issue. Score 7 out of 10. Final thoughts. Aptos brings cutting-edge technology, strong leadership, and high scalability, but it's still an unproven blockchain. If it can deliver on its promises and attract real adoption, it could become a top layer one, but concerns over token distribution, VC influence, and centralization risks remain. Final score 75 out of 100. What are your thoughts? Do you agree with our rating? We'd love to hear from you in the comments below. See you in the next analysis, and as always, stay curious and stay hodling.